welcome. I am Jonnita Stanton, and we have Reginald Perryman, Kashka Williams. We are TSARE, and this is There's Something About Real Estate podcast, where we talk all things real estate.
And everything real estate.
Everything real estate. This is the Christmas edition?
Nah, this not the Christmas edition. She just got on a Christmas shirt. She wanted to represent Rudolph.
Right.
With his cane go.
So since they want to put me on blast, and we just got done talking about being direct, Christmas is next week. And I am wearing my Rudolph. Now, when Reggie decides to air this episode, that's a whole nother conversation.
Yeah, we gonna post this episode in July. Mm-hmm. Yeah.
Yeah, have me looking real crazy.
Right.
Like, why should she? No, I'm sorry, never mind.
That's funny. So what we talk about today? We're gonna talk about some tenant-occupied properties, yeah, because that's like everybody. So we get a lot of investors that don't want to buy properties, renovate them, and rent them out. They want a more turnkey.
Okay.
But there's pros and cons to that,
Mm-hmm.
right? Mm-hmm. So, like, tell me some of y'all experience with tenant-occupied properties.
Tenant-occupied properties. Okay. So, because I feel like you jumped all the way.
I did
ahead.
On purpose.
Did you? Okay, because I'm like still wrapping my mind around it. Okay, so we're basically talking about properties that are listed on the market for sale, or we know somebody who has it for sale,
right?
And they want to sell the property.
Exactly.
Okay.
It don't matter. A property that you want to buy that has somebody already in the house.
Right.
That's thing.
Right.
Well, I think it does matter because we're talking about, I think more specifically, it is the listings that are tenant occupied. And so your question was, what's the experience?
Yeah, what has your experience been?
I think that sometimes the experience when it comes to like a buyer looking, they may just choose to avoid that property.
Okay.
If it's someone that's looking for a house and they want to move in the home right away, then that listing probably is going to be very limited to investors.
Right.
And then the investors may also be a little weary of purchasing that particular property. Mm-hmm. So you can look at it and say, oh, well, it's turnkey. It already has a tenant in there. It's habitable, and they're paying rent.
Right.
Or are they?
Right.
All right, hold on. So are we talking about... we're
talking about both.
Okay, so we're speaking from...
We're speaking from an investor standpoint or owner-occupant buyer.
Okay,
right?
so there's two different things, though. Two different
because that's what's out there, because it is a different mindset for both types of buyers.
And that's why I went to the MLS. So, like, if I'm just scrolling and I see this, if I'm an investor, it may look attractive.
Right.
If I'm someone, that wants to own or occupy the house, it may not look attractive, or maybe it does.
Right. Or even, and not just the single-family homes, let's talk about multifamily apartment buildings. Mm-hmm. Because I think a lot of times the educated investor knows what to look for, right? You know what documents you need. But there's a strategy to buying tenant-occupied properties. But a lot of sellers, they have high expectations because they're like, this property is performing, or maybe it's not performing, and they have high expectations on what the market will support.
Mm-hmm. Right. So you're saying a high expectation from the seller may be the value of the property. They may feel like it's worth or it's more valuable to an owner because it's performing.
They're unrealistic.
Or an investor,
a buyer.
Right?
They're unrealistic, right? Because they don't really have so they don't have what they call a rent roll.
Exactly.
Right? But you want to sell it for what you could or what you think you should be getting for rent, but you're not actually getting that for rent from this tenant.
Yeah.
You know what I mean? So they're unrealistic. And that's why I was saying I don't think that it matters where the property comes from, whether it's the MLS, whether it's from a wholesaler, wherever it's coming from. So for me as an investor, and it's a tenant occupied, anybody's in the house, I don't want shit to do with it right now. You know what I mean? You can't evict people. Right. I'm not interested in it as an investor.
Right.
I'm sorry. As an investor, I'm sorry. As a person buying it to live in. Right. As a homeowner, I'm not interested in purchasing a house and having somebody else tell me they're going to get out in 30 days.
Right.
You know what I mean? I'm not interested.
So what if what if the agreement is that you won't close and it's a contingency upon immediate occupancy, meaning you're going to hold off on closing until the tenant vacates? Would you recommend that for a buyer?
Yeah, I recommend that to have that as your insurance, but I still wouldn't be interested in it because it's too much of a gamble.
Right.
You know what I mean? You got your money and you're tied up into this deal, and if this person doesn't move out, you know what I mean? You got to go find the next property, and you might have missed out on 2 or 3 other properties waiting on that property.
Okay. So there's a way to decrease the odds of that being a gamble. You put a date.
Okay.
In there, so you don't just have an open-ended, indefinite time. I'm going to buy this house whenever this person moves. So, I've worked on a few contracts like that recently, to where it may be, this person has to have some sort of proof that they are moving forward by this date. And if it is not by this date, then this offer is, the offer is null and void with no need for a mutual release. Like that verbiage is in there.
But that doesn't stop the gamble, because you still got the issue of, if they don't move out by that date, you still wasted your time. That's what we're trying to prevent, right? I want a house that's empty, so that when I close, I can move into my house. Right. If there's somebody in the house, there's the chance, especially now, that individual will not move. And if that individual will not move, there's the opportunity for them to be there for months. Right. Based on what the eviction is.
Right. So I think what I'm talking about is more so you're in an offer process and you're willing to move forward with the house if these people will vacate before closing. Right. And then if then you put some sort of time frame in there, because so yes, you will lose some time, right? But you're not gonna lose some indefinite amount of time, and then you don't have somebody holding your earnest money hostage, right? Keeping you part of the contract.
Best practices. You're talking about best practices, right? That is definitely the best practice.
So let's clarify that before we go into the investor side. The reason I wanted to bring it up, because buyers are out looking, and with low inventory, they may be limited. There may be a great house, it's a tenant in there, and what Jonnita was saying was there's a way to structure that deal so that you can have a good chance of actually occupying this property, within
a reasonable amount of time.
Within a reason, and so because we deal with. You buy a house from a seller and they need 30 days to vacate. But there's a little bit more control over that, because it's still just the buyer and the seller. And the seller kind of can anticipate when they're actually going to move. With a tenant, that tenant at any point in time can turn around. Yeah, so let's say it's March, right? Closing is April. And you anticipate closing in April under a normal transaction, but you say, no, I'm going to give the tenant time to vacate, so maybe you're going to close in May, because you don't want to close and you assume the tenant as an owner-occupant in most cases, right? So you say if the tenant hasn't vacated by May, like you said, then I have the right to cancel the transaction, right? But where it becomes risky is you're in that deal and the tenant's like, well, I'm not closing. Well, you just wasted time, like you said, because that buyer could have just found another property, and they could have been, they didn't have to deal with all the tenant issues. But sometime it may be worth it if you're getting that property at the right price, and you don't have to move.
Correct.
Out of your current.
If you have the ability to gamble. Right. You know what I'm saying? It's like anything. If you got the money to gamble, right, gambling may not be that bad for you. But if you broke and you gambling, you should, it's more damaging.
So the crazy thing is, I literally had that situation with our guest that we had on, the estate sale girl, Marie. Yeah. So the reason why she was buying another house is because that's what happened with the seller. Right. The deal was contingent upon the seller finding a house. And so I had to, constantly explain to the list agent, like, no, we have this contingency in place because, and she just like, well, so the listing agent's question to me was, basically, have you seen this market?
Right.
Are you out here working in this market? Do
Right.
you really think that 14 days is going to be enough for us to find a property and get it under contract?
Right.
And my response was, it's really not our concern that is enough time, but that is the amount of time that we're willing to give and stay committed into this transaction.
Right.
And if that seller has not found a place,
right,
we, the buyer is free to move on so that they can get settled.
Exactly. So the message what we're saying is, if you are a buyer and you plan on occupying a property, not an investor, there's a strategy that you have to use, and there's certain language you need to have in your contract if you're going to buy a property with a tenant in it, because it's a higher risk. Mm-hmm. Because not even the seller can guarantee. Unlike you buying a property from a seller, they need occupancy. Mm-hmm. They can say, oh, I'm just going to move with some family, put my stuff in storage because I have this deadline, right? And there's an incentive there. And plus, usually you're holding extra money. When you buy a tenant-occupied property, the seller loses some control, and then you don't know if the seller started the eviction process before. Is it going to happen after? It's a lot more risk involved. So you have to structure your deal a certain way and have certain verbiage in there to protect yourself and give yourself an out, because that eviction period can be almost indefinite.
Yes.
Right? And you don't want to be on hold forever.
But there's still strategy, which is the point. So I guess the whole thing is like, if you are an investor or somebody who wants to occupy the property, the house can be tenant occupied as long as there's language that specifies step by step, these are the deadlines.
And as long as you understand there is the possibility that you could be stuck in that situation, you have to understand that. You have to go in there with the understanding. That's why I'm saying, if I'm a owner-occupant buying a house, I'm staying away from that. I'm staying away from that.
Well, especially if you're having to wait to evict until closing.
No, but you don't know. That's the problem. I don't know if I'm going to have to wait until eviction, because...
Or maybe the tenants are going to move, but it's kind of give or take. You don't know for sure.
So I'm not going to... As an agent, if that's my client's situation, I'm not going to steer them to that property that has a tenant occupied in there if they don't have to. Now, some situations, that's the best deal on the market, or the best deal that you found for that buyer.
That price and that,
and then they may, and if I explain to them everything,
it's risky.
The risk that's associated with the bidding on this property, and they're fine with it, cool. But that's not one that I'm looking.
Well, I will tell you.
So
every time I explain if it's a situation where the person wants to occupy, I'm kind of like, you understand? It's got a tenant. This is not the owner. This is something that you will have to deal with as a landlord.
Right.
Maybe they will move. Maybe they won't. Do you want to look at that house?
Yeah, then the issue too, like with me personally, if I work with a buyer, if they say they have to move, like they're in a situation where they have to move by a certain date, it's even hard selling them something where the seller needs occupancy. So a tenant occupied property, they have to understand the risk that, what are you going to do if this person decide they don't move? Maybe they told the seller they'll move when their lease is up. But if they don't move, then we have to wait through the eviction process. What's your plan B?
Yeah. Do you have a plan B?
Right. So as an owner-occupant buyer, if you're buying a home to live in it, you need to have a strategy and you need to have a plan B.
I think that from an agent standpoint, when you are speaking to your buyers, and it's a situation like what Reggie just explained, maybe you should ask the question, do you want to see houses that the seller or the tenant needs time for possession after closing? Because if that's not the scenario, do you think that maybe we should look at homes that are not occupied at all?
100%.
Yeah.
But that's as the owner occupied, right? As an investor, depending on your strategy, if you want the tenant in there that's been supposedly paying rent, you want the tenant and the previous owner has the rent roll, or basically proof that the tenant's been paying rent for a certain amount of time.
Do they?
Some do, some don't, right?
Right. We're going to talk about that on both sides.
Talk about do they?
then that may be a great thing for you because you step into your revenue immediately.
Mm-hmm.
Right.
You spend your money and you start recouping it day one.
Right. So the reason why I keep asking that question is because, so I think Shaka explained it very well.
Right.
That's how you feel.
Yeah.
You know, when I just looked at this portfolio,
right.
it's performing great. Mm-hmm. And then you buy it, and then you realize that the performance that they said was happening is not actually happening.
But that's why you got to do your due diligence. You got to have you a great real estate expert to be able to figure out the difference between those fake
rent rolls and ledgers,
and the real ones. You got to be, you know what I mean? Because obviously, I mean, there's simple things. I don't want to give them.
No,
right
Reggie,
now.
you got some good ones. Yeah. So what is it?
Yeah, go ahead.
So let's talk about the investor buying a single family first,
Mm-hmm.
tenant occupied. We got a couple options. You assume the tenant, right? Or you ask for the property to be vacated at closing because you want to put your own tenant in there and that type of thing. So a lot of times on the flip side, especially here in our area, we have a lot of out-of-state investors or investors that don't run their rental portfolio like a real business. So, my tenants, they just pay me in cash every month, right? I don't really keep records like that. Or maybe they send their payments through Zelle or something like that, and you have some records, but you don't have like a ledger. You don't have nothing showing how much you collected. You don't have a ledger of repairs you made and things of that nature, right? So what I tell sellers is, think of this as maybe a McDonald's or a shoe store, right? And you want to sell your business, and you can't tell the buyer who your customers are. You don't even know if they pay. You can't tell them if they pay on time. You can't tell them what your expenses are. And there's so many landlords with the single family properties that do that, but then they're expecting top dollar. So let's say Sussex, right? I got a house that sold for $112. You got a rental property, similar house, you're expecting $112 for it, but it's tenant occupied. The likelihood of you selling that property for $112 is not likely because that $112 is based on an owner-occupant buyer, whereas you have a tenant-occupied property. We get back to what we talked about earlier. That buyer doesn't want to take that risk and still pay $112 when they can get an empty house for $112 that's fixed up. Or an investor will buy it, but they invest. You were an investor. You bought it cheap. The next investor want to buy it, but 70% of market value. Right. They want some equity. So a lot of investors that are selling single families, their expectations are extremely too high because they're like, hey, this is what the market value is. That matters if you refinancing, but when you come to market, unless you're delivering an empty house, a tenant-occupied property, single family, is going to attract investor pricing in most cases.
Yeah, because sometimes a lot of these investors, they're actually paying cash. They may not be doing a refinance or carrying a mortgage.
Right.
So now they just have this cash that has been invested into this real estate, and they need it to perform to make sense of that actual cash, like that physical, tangible cash. They need that to earn interest as if they're the bank or a mortgage company.
That's why it would behoove you to have good records, real rent rolls,
right,
and so that you can. Because if you're the investor that bought it cheaper, and you operated it like a business,
right,
and kept track of your revenue and your expenses, and now you can pass that on to this new investor, even though they're paying more than you.
Right.
As long as they're getting their return on investment that they expect, then they're fine.
Yeah.
You have the correct paperwork, so then you're still in a good situation.
Right.
But if you just running it like most people do all their small businesses like a hustle, then it's not going. You're probably going to take you're going to sell at a discount.
Yep.
You know what I'm saying?
And no professional investor's gonna buy from somebody that's an amateur landlord and pay top dollar. So, and that's where the misconception come from. Oh, I got this beautiful property, it's performing. Well, how do I know it's performing? You can't show me anything. You can't show me any records. You don't even claim this property on your taxes.
Right.
Right? You don't claim the income. So you expect this investor to come in and buy your headache, pretty much. And that's what people got to understand, too. I don't care what the market value is. I care what the risk is at this point.
Right.
A lot of times, though, even if you do, so here's the bad thing. So even if your tenant really is paying at a dollar amount and you really are seeing those returns, but you can't prove it, because you didn't run your business like a business, you're going to take a loss.
Yeah.
You know what I'm saying? You're going to take a hit.
Because of the records.
Correct.
So it's just like when people buy a stock. Can you imagine buying a stock and you can't see their earnings and profit and loss and everything? It's kind of the same thing, right? Now, they can fudge the numbers, right? They can play with the numbers just like a landlord can. So how do you as an investor, what do you look for when you buy? Let's think more multifamily or single family or a portfolio, because we have
portfolio.
A lot of investors that may have 20 single family homes. What documents are you looking for?
So I would speak more than the portfolio, because the portfolio I think would be for the expert. So I would be speaking more so to the new investor that's trying to buy their first property, their first investment property, trying to get a certain return. I think the biggest thing you're going to look at is when they give you their rent roll is what proof that they have of actually receiving the rent or the revenue.
Right.
Comparing the actual market rent to what they're saying that they're receiving for the rent, because that's what a lot of people do. They mark up the rent and say, yeah, I'm getting $1,400, and the market is showing $950. So I think those are the main things that I would look for as an investor. I want to see, all right, you said you've been getting this money. Can you prove it to me?
Right.
This rent roll is cool, but what else do you have to show that? Like you said, they don't have tax returns showing it. Do you have some canceled checks?
Right.
What do you have? What ledger do you have to show me that you've been getting this money?
Right.
What else?
Bank statements.
Bank statements would be cool.
If you have, what do you think?
I think that all those documents make sense. It's going to be your bank statement showing that income coming into some place, or you could even request that the tenant produce. So like if I were going to buy a single family residence as an investment that is tenant occupied, I may say, okay, this is great. Have that tenant show some their money order receipts, their bank account showing that money coming out, their Cash App history, whatever it is. I need to see that $950 or $1,000 being paid to that landlord.
Good luck with that. If I was a tenant, somebody came asking me to prove any goddamn thing.
No, because the whole thing is that tenant still, if that is a real responsible
they're keeping their records,
they are probably keeping their records. They probably love that house, and they probably understand this house is being sold, so they're probably worried that this person is going to put them out anyway. So if they understand this person is not actually trying to put me out, they want to keep me here, they would very well produce those records. I would.
But as a seller, at what point would you allow a third party to get that information and discuss
at the point that you know
tenant?
that they're a ready, willing, and able buyer?
That you serious?
Okay, so
serious?
That's part of their due diligence, maybe. So what I like the idea, the bank statements, because I've had sellers produce bank statements. Like, this is my company. I own these properties in my company. I'm charging $850. Now, I don't know if that $850 is coming from that property or another property. So then you start asking for records. Now, you can ask for anything now, whether they give it to you or not. So, especially if the properties are in their company name, you can ask, hey, let me see a copy of your tax return, right? You own this property for 5 years, so you say, or we see the records of that, and it's been performing. Let me see your last 2 years' tax returns, right? And this is not to say you're not writing off everything, but you should show some gross income.
Yeah, those people probably should show that information. But okay, so if I'm an investor and I have a couple properties and I'm not keeping up, I'm not showing it on my taxes. I don't want to. I think that the strategy from the other side still makes sense, because at the end of the day, that person, the seller, the person selling the house, they're going to walk away. Y'all going to have that one transaction. But that person that's still in the house, you guys have to hopefully have a long-term transactional. So I think it's perfectly reasonable to try to figure out who it is that you're going to be dealing with as that tenant. Now, like you said, I may not be successful.
You mean as far as asking the tenant for their proof that they paid.
Yeah, because this is the person that I have to have the relationship with.
Yeah, but
So what about the seller? And we're still talking single family.
We're talking about single family.
Correct.
I'm not talking
right
about,
now we're gonna talk about multi in a minute. But what about the seller that say, "Oh, I just collect cash and I really don't show any"?
You're gonna take a hit. So I feel like it's on the seller. The due diligence. So the onus is on the seller.
The proof is on the seller. The buyer investor is. It is their job to determine if they want to take the risk. And you pay according to your risk.
Period.
Right. It's definitely on the seller that wants to sell that property to supply sufficient records to move that.
Right.
But if we're talking about a first-time investor trying to approach a situation smart.
Right.
I'm just saying I would see how much I can get from the person that I'm going to have a relationship with.
I get it. So here's the checklist. You're buying a single family property. One, we all agree you want to see a rent roll, right?
Yes.
If they have a property manager, I personally would recommend having that property manager, because they're supposed to be licensed. I would have them sign a document saying this is an accurate accounting of what we collected on this property, right? So this way you can kind of hold them somewhat liable and responsible. And then bank statements showing the deposits, if they'll provide it, and possibly a tax return showing the income from this property, or a P&L or something. So if I can get all of that, the more comfortable I am. The more you deduct from that list,
the less I'm paying.
Yeah.
Because all the things that I said too, you can very easily, if the person is paying in that manner, that seller will have those documents on their side too.
Exactly.
But they should.
Yeah.
That's the
point. They should, right. And then, so the issue is, the more risks I have, I start assuming automatically when I buy this property, I'm probably going to have to go through eviction. So I'm making my offer price according to that risk, right? Okay, what about, so let's talk about the actual lease agreement. So we had issues where the seller says, well, we don't have a security deposit, right? Do you just take their word for it, or do you want the tenant to sign something? I usually
100%
have the tenant sign something acknowledging, hey, I'm buying this property. According to your landlord, there's no security deposit. So when you move out, whenever you move out from here, you're not entitled to a security deposit.
I might even go as far as saying, and they have to get them to sign a new lease agreement in order to get me to buy that property at the price you're asking for. If you can't get that, then I'm offering less.
So let's say closing is Thursday. They need to have that document signed by the tenant, state in a letter to the tenant saying, hey, this property is transferring ownership. Here's the new lease agreement, and you want the tenant to sign the new lease agreement. That makes sense.
Because, I think that anytime you kind of take the property manager and the previous seller out of it, and then you start getting to some of the things in your contract is going to be, the tenant that's there is going to take some of that responsibility. You may be having more of a secure investment, because the facts are, especially here, if we're talking about like Detroit rentals, and the history, I would, I'm just not really trusting the documents that these people are producing.
Right.
I don't give a damn where Detroit, Canton, wherever they at, right?
Yeah.
If you haven't been running your business, if you haven't been taking it serious enough to keep your record straight, now you're like you just said, you're passing on your risk to me. And the more risk that I take, or that I feel like I'm assuming, the less money I'm going to be willing to put out for it.
Right.
Period. Yeah, I mean, I hear what you're saying. You're saying like Detroit is a renter's market, and dealing with a lot of evictions and turnover.
No, I'm not really
stuff.
saying that it's a renter's market or high turnover. I'm just saying that based on the information that I've received over the years, when you start talking about property managers and how they maintain properties and records, a lot of times, sometimes the people just are out to accomplish their goal.
Correct.
Let's just be honest. A lot of people are not professional.
And when they're out to accomplish their goals, they're going to give you whatever it is you want.
Right.
And so if I'm and I'm speaking from, I think this is more of like a singular, like, single family, because it's gonna be hard to take over a whole portfolio, like, and be able to get stuff from that tenant. But I think that it's just a combination of doing your due diligence. Like if I'm sitting on because the other thing that you also have is, if I am a listing, or Reggie lists a house, or you list a house, you're also taking into consideration those things already, and you're pricing that house accordingly. So now you're going to come and deduct my price some more.
Now, that's a good point, because I've had properties where I'm like, oh shit, the listing gonna sell, but the owner's not organized. They were just mom and pop shop. They was accepting cash. When I list that property, I'm telling the agents up front, they asked for rent roll. I said, look, this seller don't have, make your offer according to what? Because you're assuming a risk, right? They told me they pay on time. The tenants say they pay on time. There's no eviction being filed, and we're talking about pre this market. You're assuming this risk. I don't have anything to provide to you. So if an agent asks for it, this is another red flag too. Anytime you ask a listing agent or a seller for all their rental records and the documents we mentioned, if it takes them 2 weeks or a week to get it to you, that's a red flag.
They doctoring papers.
They're trying to create it, right? Now,
what do you put in your listing ticket though? As the person trying to sell this potentially risky property, do you say some of that stuff in your remarks?
I tell it like it is. I say, look, seller collects rent. Seller has collected rent. Tenant's been there according to the seller. Seller doesn't have rental records, rent rolls, pro forma, whatever it is you gonna ask me for. We ain't got it. So, and this is why it's priced this way.
That way,
right? Because I've already explained to the seller, look, you're selling a high risk product at this point in time. So we have to price it accordingly. But agents will still, and buyers will still call and complain. Well, why they don't have this? Look, if you're getting a $120,000 house for $80,000, you
should know.
It's gonna cost you, worst case scenario, a few thousand to evict the tenant. You might have to fix it up after they tear it up. If they tear it up, you taking a risk. You know what I'm saying?
So at the end of the day, as the buyer, you need to get as much information as possible to make sure that you're making a sound decision on your investment, right? And as the seller, if you want to get top dollar, have your shit in order. If you're using a property management company, make sure they have their shit in order. Make sure you're getting your quarterlies from the property management company, or monthly, however often.
Because that's a good point. I've had sellers that don't know the tenant. They never even seen the property. They brought the property sight unseen, turned it over to the property manager, or even they brought it from the property manager who's licensed too, and it just was performing, and they didn't question anything. And the property manager is the one providing everything, and the seller don't know jack. And then all of a sudden, the property manager find out they're selling, and they're upset because they're about to lose monthly income. So they're like, they're not giving you the document. So now the seller is trying to scramble, looking through their records that they never collected from the property manager.
If you're the seller, you got to be on top of your shit in order for you to get top dollar.
Right.
If you're asking for top dollar, make sure that your business was in order.
Right.
If your business wasn't in order, don't expect top dollar.
Right. Yep. So basically, we talked about the documents you should look for. So basically what it boils down to, when you're buying a rental property, you're buying a business, you want to see all the documents to show that this is performing. And as a seller, you need to be prepared to show these documents if you want this type of high-end price for it.
Period.
What about the non-performing properties where somebody just tell you up front, this tenant hasn't paid, and how are you approaching that?
So it's got to be, the equity has to be in there. The money has to be in there for you to take the risk.
But then you run across stuff like water bills, right? So like, because if the tenant's not paying, I'm pretty sure the seller's not paying the water bill. And if the seller hasn't had the tenant sign an affidavit, then the water bill is still with the property. And you might not really know the water bill until closing because the seller just gave up on it. So you run that risk.
But there's due diligence that you can do for the water, even in our toughest cities. You know, so ours is Detroit.
They're not the only one.
No, that's what I'm saying. Yeah. I mean, ours is by far. Detroit is the toughest, especially when it comes to water.
They're the least. They're the least organized. Their shit is all over the place.
When it comes to water, so one of the things that I've realized recently is you can contact the water company. So some of your easier cities, you can call the city, you can talk to their water department. They'll give you water easy. But some of your tough cities where, you know, they're big, they're, you know, harder to manage, they just have a lot more going on. You can contact them and they still should have at least a Excel sheet that they can show you of what's happening currently.
Yeah, like a water history.
Yeah, so if they may not have the final water read. But they can show you like a history of what's been going on and where it is as far as, you know, where they currently are and where it stands. And then at least at that point, you'll know like, okay, am I dealing with $1,000 behind or am I dealing with $10,000?
Right. Well, let me explain too about Detroit. So Detroit switched from, so water was just a lien on the property. The account went to that property. The name on the bill was just who was receiving the bill, right? It wasn't necessarily always the owner. Detroit Water Department allows a tenant to sign an affidavit to put that bill in their name, and they collect like Social Security information, things of that nature. If you're not the tenant and you don't have like their ID number and their social, they're not going to disclose that because of a Privacy Act. They can't disclose that bill to you as a third party unless you're authorized. But if it's in a tenant name, you don't have much to be concerned about because that bill goes with that tenant. The issue is a lot of, especially out-of-state investors that are selling these properties, they had either a property manager or they let the tenant move in and never put that account into the tenant name, so it stayed with the property. Well, if this seller brought the property from another investor before this went into effect, because remember, it stayed with the property, the new owner never went and put the account in their name. So they can't even get the information and the tenant lives there. Now they have to, in order for you to get the information, they have to go and open an account and show the water department all of their records because they never did this before in order to get the account on, and then they can find out the balance. So when I'm dealing with a seller like that, it's almost like, what the hell? You don't know. Your tenant's not paying. You don't know when the last time they paid. You don't know what repairs are done. You don't know what the water bill is, and you ain't talked to your property manager in 2 months, but you still want top dollar for the property.
Correct.
It just don't work like that.
You can't even get in the property.
Buyer,
and your title bond.
Your best friend in that is who? Who's your best friend in this transaction?
The title company.
The title company.
Yep. Now,
kind of, because it's so much stuff outside. I mean, you know, the title is going to be obviously the first step. So hopefully before that property was listed or during that listing process, title search was ordered.
Yeah, no, we're talking about the water though. Title company is your best friend in that situation.
But because some title companies have good relationships with the water department, and they can call and at least get you a status and a.
But even more than that, they're not insuring your title, right? Unless they can verify it. So I think that's where you was getting ready to go. You was gonna say, well, they move slower, or maybe because I've run into situations where the title company is like, this water bill. We have proof and everything that this water bill has been paid. Title company's not accepting it really because they didn't get it from whoever they felt comfortable getting it from. I don't care about that. I'm fine with that because they're still protecting my interests.
Right.
If I close with a title company, I know that my interest was protected. I know I'm not buying a house with a $10,000 water bill.
Well,
that's not necessarily
because
true.
That bill is estimated.
Hold on, unless the title company will not insure it unless they're going to put some wording, some verbiage in there to tell you, hey, we can't guarantee this.
Right.
So if they
some
say
exceptions.
that, but I'm saying you don't sign. Why would you do that? If the title company ain't going to insure it, you don't
clarity on what you meant.
No, that's my point. That's why the title company is your best friend. If the title company won't do their normal job, that means that there's a potential issue.
Right.
And I'm not moving forward with that transaction until the title company can give me clear title, not title saying with additional verbiage saying, hey, I'm sorry, we can insure this, but as far as this, we can't insure this.
With the exceptions.
Yes, I'm not doing that. But if you get full title insurance, and we have to get a title person back up here, Emma or Tim, and to explain that in depth. But point being, title company is your best friend in that situation because they're not going to insure something that's not true.
I just don't necessarily agree because when we all know that you close and then they try to hold as much of an escrow. Now, when you're dealing with Detroit, they have gotten to the point to where it's like, this has just been. We'll hold $5,000 from the seller's proceeds, just to make sure it's enough. Yeah, and they should. But sometimes we wouldn't be having this conversation if the title company was necessarily the best friend, because the reason why we're having a conversation about water is the water traditionally passes with the land,
right?
And a buyer could very well be left with a very large water bill.
But you won't.
Because they didn't get a
if you didn't get
well,
it.
you can still, even with title insurance, because they'll hold an escrow, and that bill was probably an estimated bill for several months, maybe a year or longer, and you won't know until you get property. And now you order a final water read, and they're like, we was estimating this usage $45 a month or whatever.
Guess what they're gonna do?
But all of a sudden, it's this lump sum. But then the title company was only holding $500 in escrow, but now you got a $4,500 water
The only
bill.
way that's going to happen, the title insurance is not going to get.
It's not going to cover that.
Correct. They're not going to give you full. They're going to have additional language to tell you that if that's in the title insurance.
Right, but I'm saying you won't know that until after you close when you got that final bill.
No, you know this prior to. So when you go to the title,
you don't always know. No, I'm saying the title company says that, but what I'm saying is that bill. Let's say you buying the property, they call and get the water bill. It shows a balance, $400, right? They've been estimating $40 a month for whatever, however long, right? It's your job to say, I want a copy of the bill history so I can see if these were actual reads or estimates. Most people don't do that.
And that's what I was talking about you can do.
Yeah, they'll just look at the bill and be like, okay, the title company's going to have this $400 paid plus hold another $500. But you have to order that final water read, but that water read is not going to come for another 30 days.
Great. So,
right? And then that water read be like, oh, this estimated bill was off by $3,000.
Gotcha. So guess what? Title companies have run into that situation numerous times. So what do they do to protect themselves in that situation?
They're not going to cover it.
They're not going to cover it. Right. So when you see the title company, no, but I'm talking about prior to closing, what's the title company going to say? What are they going?
It depends on the title company.
Well, most of them, because they don't want to come back and get sued either. Because can't sue them.
Every title company's not going to tell you that the bill is estimated. They're just going to tell you what the bill is.
Well, good. So do we get into
let's say this.
Better best. Here we go.
Let's say this. A good title company. A good title company say, hey, we got the water bill. By the way, it's an estimated read, or there's 3 accounts on this property.
Look here, let me tell y'all something. I don't care. No. I am. That's what we doing here. I don't care what these experts say. That is your due diligence. And
it is.
Any county, wherever, you can call.
Right.
And do your due diligence.
Or
that
city.
Is just, or city. That's just, so I don't play with water.
Right.
I don't, like, you know what I'm saying?
For those very reasons. But we're talking about we're talking about a newbie who may not have this information.
So let's just give this advice for the newbie. It doesn't matter who you hire.
Yes.
You need to get the water bill and you need to read to see if it's been estimated. When was the last time it had an actual read? And if it hasn't been an actual read, you may want to hire escrow help.
Period. So, you definitely want to have escrow help. But I'm telling you, when I'm dealing with buyers and water, I will tell them, I will help you. The title company is also supposed to be doing this. But let me tell you something. Call down there yourself.
Yep.
And I say ask 2 questions. What is the current amount due?
Right.
And what is the balance?
Right.
I said, it sounds like the same question.
Right.
But when you're dealing with water, they're 2 different questions.
100%.
Right.
So,
but when was the last actual
Can you
read?
get a final, y'all saying that, right? But it's a simple answer here.
Right.
Yeah,
Get the final fucking meter read, or don't move without it.
Well, no, the issue with the meter read is, let's say your closing is 3 weeks from now.
Mm-hmm.
When do you order your final read?
That's why Detroit sucks, right? That's why she's calling them hard.
I'm saying in any city.
I want my final meter read as close to the closing date as possible.
The water company may not.
When do you do?
Because in most other cities, you can get that 2 days. You know what I'm saying? That's a 2-day process.
Two
but
to
talking
three.
about Detroit is
But some cities like Southfield will say, go in the house, look at the meter, and call
read
me
it
back
yourself.
with the numbers.
You're a professional.
But you read it, and then you have both parties verify that the reading is accurate, right?
Yeah.
But what I'm saying, you close in 3 weeks out from now. If you get the water read too early, now you got 3 weeks of usage, which shouldn't be that much, but who knows what the tenant is doing? Because remember, we talk about tenant-occupied. If you get it too late, then that means you're not going to find out the real information till after closing, right? So you have to time that. The best thing you can do is find out when was the last actual read and estimate from there, and then say, look, okay, based on what I found, 500 is not enough for escrow. Maybe you need 3,000 in escrow.
And that's what I'm saying.
Because that puts the pressure back on the seller to try to hurry up and get that water read done because you're still holding up.
But
your
I think
money.
I think that why this is such a big debate is because water is very serious, especially here. I can't speak for other cities and states and things like that. But there is a lot of due diligence that a buyer can do. And so, if you have a professional that's working for you, I think that's just, you should protect yourself in that area.
100%. But we still always talking about people that don't have all this information. So
they got it.
That's what we're
watching the show.
Yeah, that's what we're doing.
Super. But we're talking about people who don't have all the information. So
or the resources. I know what you're saying, right?
I don't want to scare somebody and say, because that shit right there will scare somebody away. Your best friend in this scenario is the title company. Your next best friend is going to be you yourself doing any due diligence that you can. Your third best friend is going to be your good real estate professional.
Right.
You know
so let's talk a little bit too about discovery, right? So some cities have rental registration. So you're buying this rental property. Another thing you should ask for is if the property is rental certified. So on a listing, when we list it in the MLS, usually if it's like a multifamily, it asks if the property is rental certified. But you should still ask that on a single family.
Yes.
The issue is when you buy off-market properties, most people are not going to tell you. First of all, the buyer, we're telling you now, if you're an investor and you're buying a property, check with the city to see if there's a rental registration requirement and certification. If it is, you need to include that in part of your due diligence. 100%. Then you need to determine if it's not, what is the penalty if I get caught by the city and I buy this property and I'm assuming the responsibility, or can a seller order the rental certification inspection and then I make my offer contingent upon seeing that inspection and then I determine if I want to do the repairs or not. Because a lot of people are buying these properties and then finding out, because here's the thing, a lot of blight notices don't show up on title unless there's like a less pendants or something. And a rental certification is showing up at the building department and not all title companies check those records. And they won't insure them over them.
And that's another thing too, the blight. So because he's not on the back end part. When we're buying property, I still the same due diligence that I ask so I have a heart to heart with buyers and say, hey, you don't want to leave this in the hands of somebody else. So you should contact the municipality and ask these questions. I do the same thing. Like, I'm not saying it's 100% guaranteed. However, I'm doing some sort of due diligence. Like, do you have any history of blight? Are we going to be stuck with any tickets? If so, how much are those currently?
Right.
So what you're saying is, no, I understand that. I just don't have to do it because you handle it. So what she's talking about, so you're saying you're a good real estate professional. You want so people, that's when you got to be careful as the buyer with hiring your cousin just because they're your cousin if they're not experienced. You know what I'm saying? I think here and when we're speaking from experience. Like dealing with like I took a lot of L's. You know what I'm saying? So now I can explain to you what not to do, so you don't have to take that L.
Exactly.
Whereas this other agent who we're
never
around
dealt
it too.
with it.
Yeah,
Right.
they haven't dealt with it. So I dealt with it from the investor standpoint.
Right.
I dealt with it from the agent standpoint.
Right.
I dealt with it from multiple standpoints. You know what I'm
Right.
saying? So that's what you're saying. You have that information. You have that information because you got burnt by it or almost got burnt by it at some point in time. You experienced it.
And another thing, the reason you have to check is because sometimes it's not that the seller lied or the title company. What happened? Let's say, for instance, you're in a city and they're a little bit more strict than others, right? Mm-hmm. And in your agreement, you have certain language in your lease agreement. And let's say that one day your tenants, they park their car on the grass and they start being shade tree mechanics, right? Mm-hmm. And the car is out there for 3 months. The city put a ticket out there, and you're out of state seller or landlord owns the property, but they're sending the notice to the property manager who never notified the actual owner, and it's just this fee out here. Or maybe they posted the notice and ticket on the property. Of course, the tenant's not going to tell you, right? Mm-hmm. And it's just sitting there. Mm-hmm. And you come along, you buy this property, and all of a sudden it's this $800 blight fine that you got to pay, right? So that's why it makes sense what you said. As the investor, you need to call the municipality yourself and not rely on these third parties when it comes to certain documents and things
I feel like that's one of the easiest things that you can do for yourself that can save you a lot of money. Like, some of the stuff is more complicated. Like, you're not going to be drafting documents and, you know, knowing to get all these rent rolls, ledgers, and bank statements, so you do have your professional doing those things for you. Right. But when your professional says, hey, I'm going to help you and I'm going to call, but I need you to do the same thing, that it really does save a lot of heartache.
Right.
Well, that's why you pay. You get what you pay for.
Right.
Mm-hmm. Right. So you want the guy that's gonna give you 2%. They're gonna sell your house for 2% or 1.5%, and then now you run into all your issues. Right.
Right.
You hope that agents like Reggie and Jonnita are not accepting myself. I'm not doing anything for less than. The minimum is going to be 3%. Right. You know what I'm saying?
Right.
And then depending on how difficult the transaction is, it may go up. Right. And
then also, you got to keep in mind what type of clients are you accepting. I've had deals where nice house, agent car, no problem selling it, but then the client is not cooperating or they're just a pain to deal with. So sometimes, as a realtor, you have to select your clients appropriately because they got a product that can sell, but they're not providing the necessary information in order for you to sell it. And they're like, well, why I got to do all of that? This the biggest thing I hear. Why I got to do all that? I didn't have that. I didn't have to do that when I brought it. I'm like, because you brought it wrong. That's why you selling it now.
Yeah.
So you're not going to find the same sucker that brought it like you were when you brought it. I'm not in it to find sucker buyers.
I think that when it comes to being an agent, so as two agents, you should learn those municipalities and what they require. As far as inspections, pre-sale inspections, water, blight. What are the requirements going to be to sell, and then also how do I help quarterback this transaction to where my seller or my buyer is protected?
And that's one of the disadvantages of buying, like when you see people offering packages of off-market properties, like who's the professional that knows what they're doing? So if you're a buyer, you're taking on a little bit more risk because you don't know. It's not that the person selling the package or the agent or wholesaler that's selling the package, it's not that they're not telling you this information. Maybe they just don't know.
They're not,
right?
They don't know.
So you as the investor buying these properties, these are the steps we're giving you on what you need to look for if you're buying rental property.
And you probably should also have a manager somewhere too. So like you got, like you said, out of town investors, so that's out of state, out of the country.
Yep.
Maybe have somebody that you trust to manage this like closer, because I think that I'm learning that some of the property management that I've seen has just been like, I've seen some stuff and it's like, man,
they just like the realtors.
Yeah.
You know what I mean? They get in and say they're a property manager just for the
just because.
Just say it, but that doesn't mean that you're a good property manager.
No, I think that out of country and out of state investors don't even understand that in order to be a property manager in Michigan that you are supposed to have a license.
Even if
so you have a lot of unlicensed people saying that they're property managers and then they're not property managers, so they don't know the due diligence that actually has to be done. And then now they're just trying to make money, and so they're taking your money to try to leverage it.
Right.
And your money is being, flushed down the toilet. And you think that you're in a good investment, you're in a performing situation, only to find out this person keeps calling you, asking you for money, and then you realize, like, I don't even really have a real investment here.
Even if that's licensed, though, if they don't know. Right. You get what I'm saying? So it's a matter of knowing. So you can have an individual that's not licensed that still knows, and then you got the people that are licensed. But
the facts are in Michigan, in order to be a property manager, you're supposed to be licensed, and when you're licensed, you're held to a higher standard.
Facts. So let me.
But you still don't know.
You brought up a good point, right? So another thing, if you're buying an investment property, a tenant-occupied property from somebody that has property management, you should ask that seller would you use them again, right? Because a lot of time, I've had sellers. I say, okay, who's your property manager? And then ask them questions like, do they give you rental records every month? Do they update you every month? Is the property rental certified? And they'll say, I don't know.
Right.
How do you not know if your property's rental certified? Or they'll say, I didn't know they had to be registered. Well, you would have known because you would have had to pay for the repairs and what the repairs were for.
But like to Shaka's point too, so right now, and I can't disclose like addresses and the company because they're they're huge here in Michigan and they are licensed.
Yeah.
And what I'm finding out is the things that they're supposed to be doing as a company, like legally, they are not doing.
Right.
We're talking about commercial commercial property.
Right.
You know what I mean? So I think that, even for some of the larger companies that you think may, this large company that's very well known here in the state, you still got to do your due diligence with those as well. Yeah. Read the reviews, maybe contact the management over that commercial property and find out how that management company has actually been performing.
So let's talk a little bit about all right, so we covered the owner-occupant buyer, pros and cons, do's and don'ts, and we covered the single-family investor buying a tenant-occupied property. Let's talk about your multifamily. Maybe let's say 10 units and up to 100 units. I know we're looking for the same things, pretty much, the rental rolls and everything. How does that play out as an investor when you have, your inspection? Let's say it's a 40-unit apartment building. Do you need to see each unit? How are you going through about your inspection?
A lot more money.
If you're a good investor, no.
Right.
I mean, because that's what I was about to say about the other one, too.
Right.
Due diligence takes time.
Right.
So if you're in a situation where they're trying to rush you through the transaction,
right,
I don't want to be in that transaction. Every time we do that, right, it ends up bad for us.
You know what? I think that when it comes to commercial, a lot of people don't understand that, and agents writing these contracts as well as the buyers getting to them, especially if they're new to them, they don't understand that there's a much longer due diligence process.
Right.
So they may write a contract that has like a 7-day due diligence.
Right.
When they should have a 30 or 60-day due diligence.
Right.
But I think that's because you got people that pay it in 7 days. So it's we talked about this. It's the people the fakers.
Right.
The people, you may have the money, but you know what I'm saying, to buy whatever it is you're purchasing, but you don't have the experience or the knowledge to do it.
Right.
But you're doing it because it's cool.
Yep.
You know what I'm saying? So now you coming in fucking up the game pretty much.
Right.
That's one of the, we personally know of a situation, once again, no
I'm about
names.
to bring it up.
I
ain't gonna speak no names.
Yeah, but I guess that's not, when I was finding out some of the information in the transaction, the person who was coordinating the deal could have saved themselves a lot of headache by just having a longer or the appropriate due diligence
right
in there.
Right.
You know, like had that even been in place, you would have understood. Like, dang, okay, some of these other dates is a little tight.
Here's the thing. So here's the issue.
Right.
They scared. They got somebody else. This is just like in all the purchase agreements for the single families. You got somebody talking about they're gonna close in 30 days instead of 45 days. You know what I'm saying?
Yeah.
Right.
Of course, as the seller, you got to pay attention to that. You know what I'm saying? Just because if somebody come to me and say that it's a loan and they're gonna close in 30 days, I gotta if I'm the agent for the seller, I have to explain to my seller, hey, they are saying they're going to close in 30 days. You know, they're getting a mortgage. Mm-hmm. The likelihood of closing in that time is not high. Right. It's possible. Yeah. But it's not necessarily likely.
Right. Look, I might say, look. Oh, I'm sorry. Go ahead.
So that other individual that may have said 45 days.
Right.
I'm not necessarily going with you because you said 30 days. Right. You know what I'm saying? I might like the person that said 45 because I feel like they're more realistic. They're more sound.
They factor in,
especially when you got your finance. If it's financing in there.
Yeah. And so when you go into commercial, it's really that. Man. Yes. People running around talking about they're gonna close a commercial deal in 30 fucking days. Right. I don't want nothing to do with it.
Right.
You know what I'm saying? Like
because either they're extremely, because what happens is somebody is extremely desperate or excited and then they have buyer's remorse.
Correct.
They look for any reason to get out of it. I see it on regular single family.
They hold it up. They hold your deal up.
Look, I was about to give a trade secret.
What's that?
Business. So a lot of the contracts don't read or don't clarify. Right. And so you'll get somebody calling saying, oh, our due diligence period is up. Oh, really? Let's go back to our contract and look at it.
Exactly.
Like I've had people call me and say, I'm like, no, do you see line item this number? It says this many business days.
Right.
Oh, you got me.
Right. Yeah. Because it's business days. And then people so let's say like 40 units and up or whatever, your commercial multifamily properties, there's a little bit more in the due diligence, right? Because now you're not just having one inspector. Like on a single family or maybe like a 2, maybe a 4 unit, you can have like your regular home inspector come in and inspect the property. Usually with a large multifamily, or something like that, I want an actual HVAC company to look at the boiler, and then I want my separate, like I want a structural inspector. I want a roofer to come out, somebody that specializes in flat roofs to come out, look what my options are, look at the maintenance costs, and all of that factored in, and then for I want to prepare my own performer so I can see what the projections are at the current rental rates. What will this market support and things of that nature. So are you looking for anything addition than the regular rent rolls? Because usually in the multifamily, they should have better records.
They should.
They have to. If they don't have them, I'm going to buy it at a deep discount.
Yeah.
Deep discount.
You know, and what about...
because I think that is a telltale sign of...
how it's being ran. How it's
being ran, and also how it's producing.
Right.
Because I think that sometimes if you have a large commercial property, let's say you have more than 20 units.
Right.
And then you don't have those records, there's been some distress somewhere.
Yeah,
you know what I mean?
Mm-hmm. Yeah.
So, because otherwise, why wouldn't you have this organized?
Right. Now, another thing too, like when we talked about like city inspections, a lot of cities. So in a single family, technically, if it's a rental certification, you're supposed to post a certificate of occupancy somewhere on the premises, right? But we all know in most single family and some 2 units, the tenant's going to tear it down or whatever, right? But usually in the multifamilies, they still have to leave it posted, like maybe in the lobby or something. There's other disclosures and stuff that you have to notice too. What about when you have like an on-site property manager or something like that? What are you looking for? What type of information? Are you talking to that person? Because a lot of times they'll tell you everything during the showing.
So look,
that might be one of the best situations. So go ahead.
That's the best one. I mean, for real, because a lot of times they be disgruntled, right?
Yeah.
They're going to tell you the truth.
Right.
But in those situations, The first thing I'm going to do, first thing I always do is go to visit the property. When you visit the property, you're going to see tenants walking around.
Right.
And you're going to ask questions. Hey,
look, he had this one time. I went in there for like a day. I was like, all right, call me when it's over.
Right.
Yeah. You talking about on 6 Mile?
7 Mile.
7 Mile. Well, it was one on 6 Mile. And
Right.
Mm-hmm. Speaking of tenants walking around too, so one thing, and you can do this with single or 2-4 units. I look for police report history on that building.
What you call that?
Because you don't want to buy the
message.
Right.
Yeah, you don't want to buy the Carter. Rockabye, baby.
Rockabye, baby.
Because you got to think about like how many. You got to look at, the quality of tenants that's in that building because it can go south quick. Mm-hmm. And it might tell you why the seller's motivated to sell, too.
That's why you want to get on that property. Because if you get on that property, so if you get on the property and you actually walk the property, so you ask, well, do you want to go to every unit? Yes.
Right.
If you don't go to every unit, you didn't do your due diligence.
Right.
Properly.
Yeah.
True.
You know what I'm saying?
That's real.
You want a pest inspection too?
Yeah.
That's another inspection those multi-families.
What they call them?
Especially commercial.
Those,
termite?
Termites, yeah.
Yeah, termites.
Real.
Yeah.
You know what I'm saying?
So I think that, from what I'm finding, I think that the single family due diligence for purchasing on an investment is not much different from the commercial other than your timeline.
Your timeline. And you probably, with your multifamilies, you're probably going to have more of a team of inspectors.
Exactly.
You're going to spend more money.
Yeah, you're going to spend more money.
But I also think so. I was just telling some of my buyer clients this in terms of single family. I don't know how much I really love private inspections. I'm going to always recommend them because I do think that they pull people back and make you stop and stare longer.
Right.
But if you really are concerned, have a roofer come during your due diligence. Have a HVAC person come. Have people that are specialized in those industries come and tell you about the property if you're actually concerned.
Right. Because sometimes you'll have a private inspection and the inspector say, "Oh, we recommend having a professional roofer look at it." Like
bro,
I could have just, I could have just had the roofer. Yeah, but a lot of times in a single family, you're really looking for like what may show up, right? And then if they recommend that, then you're like, okay, I'll do it. But usually with multifamily, you definitely want to have a separate roofer come out and look at it because not only are they telling you what they see, they're going to give you the estimated cost
of
to
repair,
fix it or maintain it. So that would be the difference.
Yep. So I think that I guess we should talk about attractiveness for, the buyer. Okay, as an investor, do I buy these tenant-occupied properties?
Right.
Yes. You can.
Yeah.
I don't say that. I don't think that you should not buy that because there's a tenant.
Right.
Now, if a proper documentation isn't there, then that's like buying any business.
What if it's sight unseen?
Same thing. Like I'm not buying McDonald's without. I don't care. I'm not buying the McDonald's wherever it is because they told me they're making a certain amount of money, right? I need to come to the McDonald's. I need to see the area you in. I need to see the customers coming in. I need to talk to I need to see the workers. You know. So
are you saying no to sight unseen?
No, I'm not saying no to sight unseen.
But you still need to see some documentation.
Yeah, you need to do. There's still due diligence in everything. That's what I'm saying. And sight unseen, I'm gonna need extra. I'm gonna need extra docs. I'm gonna need things that I'm gonna need P&Ls and income docs signed off on by a certified CPA.
I know. Wait, hold on. I just thought of something else. We need to recap this and give a checklist of the documents to look for. You need those tenant applications.
Oh yeah.
Because when single family, multifamily, you need to see each tenant, their application, where they work, their history and everything, their ability to pay. Because if you tell me this person paying $850 a month and they make $1,300 a month, I need to see like, okay, what else do they have? What was on their credit and everything? And some people, there's issues with showing that information, but you need to put it in writing. at this point in time, once we get to our due diligence period, I need to see this information. Now, maybe they need the tenant's permission to provide that.
Yeah.
But a lot of times, some people are putting it, when they get ready to sell the property, they'll have the tenant sign something saying, hey, I'm selling this property. We're only going to share this information with potential buyers that are doing their due diligence period, right? Yep. Because that's huge if they're telling you everything, all the rental records match up, but they have borderline tenants all along. Or maybe they just put a tenant in there just to sell it to you as a performing
That's what I was
asset.
about to say. The issue with that, or no, it's not an issue with it, but the thing you keep in mind with that is that what if a tenant's been in there for 5 years, 2 years,
right?
Situation change. Most of the time, property managers don't come back and do their follow-up inspections or
check employment checks,
right? That stuff.
Due diligence.
Exactly.
I think the majority of them don't do that.
Right.
I think
right.
you know I'm not saying that one person is wrong for not doing it. I think the majority of people don't do it. The majority of property management companies don't do it.
So I had one application and it was like the tenant work at Kmart. I'm like, where that's at? right.
It don't even exist no more.
Right.
But look, I think that we get into some of these conversations that's like taking days. You know, this is a lot more thorough and in depth than I thought it would be.
Right.
But we can only cover so much material in one day. We may just have to come back to that and bring some property managers on and, you know, have some other professionals in the industry to kind of come back and combat our thoughts.
All right.
You know? All right. Anything else?
No, that's it.
Listen on Spotify, Apple Podcasts, Google Podcasts, Breaker. Watch us on YouTube and all that good. You know, Spotify got it where you can actually see the video now. So they got the video podcast now on Spotify. So if you don't want to watch it on YouTube, or if you got one of these newer cars where you got the actual screen where you can watch everything you listen to, pull us up on Spotify.
Please like and subscribe.
Yeah. Oh, yeah. Like, subscribe, and share. That's very important.
Merry Christmas.
And comment on our YouTube page. It's February.
Actually, you know, right. But comment, because the more comments that we get, the more we can, until we start going live, the more we can get to the scenarios that people are asking. 'Cause I get a lot of times I get people asking, like, yeah, when y'all going to talk about this? When y'all going to talk about that? And it's the majority, right? We're trying to get to the majority of what the majority of people are asking. Because there are some quote-unquote experienced people that want to know information too.
Or just put your comments. Don't be scared. Like, just put your comments in there or add in what you think somebody should look for.
Yeah.
Or your experience. Share your experience in the comment section.
Awesome.
Yeah, I want to see.
That would be awesome.
I want to see who had the worst horror story for buying a tenant-occupied property. So I want y'all to put
But not only that,
comments.
I want to also hear people commenting on like the goods, because we do talk a lot about, like, you know, we are in a big city, so it's a lot of cons. But there have been healthy experiences. I've you know, strived in Detroit.
Yeah, I had a lot of them.
Thrived in Detroit. But so I like to hear the success stories as well. That'd be great.
You know what I want to hear? I want to hear people's what they don't agree with.
Yeah.
You didn't agree with something I said. You know, we need to think about that.
Yeah.
Somebody didn't agree with something we said. They want to come on the show and they want to discuss it.
Right.
Let's do it.
Please.
Yep.
Make sure y'all disagree with Shaka.
Yes, please. I'm ready. I'm ready
Man,
for it.
between y'all two, y'all disagree with each other. Y'all agreed and disagree. Y'all, wait a minute. I don't even know how to explain.
You saying that you agree?
Y'all
You're saying the same thing, right?
Y'all disagree on so much, but y'all get along, and then I'll be in the middle of it.
That's a wrap.